All right, Shashank Agarwal is now joining us, MD at Salasar Techno Engineering. The company has won some new orders, and if you look at the last quarterly results, they have clocked close to 300 crore revenues and profit of about 18%, which keeps you at almost 4 times sales. We'll not even go on the valuation front. You are in a sunrise sector where the expectations are very high, Mr. Agarwal. What kind of growth are you witnessing? This order is fine, but can you give us visibility on what kind of growth which lies ahead in your order book and improvement in margins? Can you unmute yourself, please?
Okay, I think there is a bit of an audio glitch, Mr. Agarwal. We can't hear you. I'm not sure if it is you are on mute or probably there's some tech issue. But in the meantime, we'll try and fix that. But the point is that, yes, the company has been bagging orders. It's been in growth areas like, power transmission, railways, etc. But the overall growth and profitability has been a bit slower. Mr. Agarwal, would you want to clarify that point even my colleague Ajay was making?
Yeah. So this is an order which we have received from ZETWERK, and in fact, we've been working with ZETWERK for the last 1 year. And this is primarily for the solar sector, wherein we have got into a long-term contract with them for a year's supply for over a period of 12 months. This is the quantity which we need to supply. And this only shows our commitment to the customer as well as the customer's faith in us, wherein we are utilizing our fabrication and galvanizing facilities. And this demands a very good high quality work because all these structures are being exported to America. And ZETWERK has been on the forefront of on this business. And we have been the partner for the last 1 year. And, going forward also, we are looking at a very good, order book in terms of supplying structures for the same sector.
Sure, you're looking at a very good order book, but I just wanted to narrow it down if I can, Shashank. I'm just going through your numbers. You're in growth areas, whether it's, power transmission line, railway track, even, telecom towers, etc. But your profitability from FY18 to FY23 has grown at a CAGR of just 6%. Even the top line CAGR has been just 15%. Do you expect a solid acceleration from here on? What could be the revenue and profitability growth given the order book you talked about?
So, of course, we have recently commissioned one of the largest galvanizing plants, which would give us extra order book in terms of manufacturing. But as far as the profitability is concerned, I think percentage-wise, we would remain range-bound. I'm not expecting the profits to go up substantially in terms of the percentage. Of course, the numbers would increase as the top line is increasing. But, we being in a sector where, and it's not a rocket science which we do, it's a volume game. And it's a pure commodity game wherein, the steel is a commodity and we are making product out of it. So it's a very transparent kind of a costing between us and the customer. So there is a limitation to a profit which can be, made out of this. But yet, in terms of our revenue growth, in terms of our top line growth, in terms of our CAGR growth, we are growing. We've been growing at a good number. And this year also, we are expecting to grow at least 18 to 20%. And probably the same pace would continue further as well.
Shashank, so if I see your current run rate, 17 crore net profit, and in the four quarters far out, assume say you can do 80-90 crore, and the next year 20% growth on top of that. Is that safe to assume?
Yes, of course. I mean, in terms of our PAT margins, we have been at about anywhere between 4.5% to 5%. And depending upon our top line, it will depend how our top line growth is happening. On a similar line, our profitability will also, it'll follow the same trend.
All right, Shashank. Thank you very much for your time explanation.